Good morning, and welcome to Market Wake Up, your one-stop shop to break everything down macro and explain it in just trading language. That's all we do here. If you've ever thought, what's the real force driving the market, you're in the one-stop shop to find out. My name's Jordan, this is John, and without further ado, we're chatting all things Canadian dollar today. Let's get in to Market Wake Up. Good morning. I can see our poll has already gotten a hold of Musclay. He's jumped in straight away and said, got to be maple syrup. We've already got him. Hook, line, and sinker. Guys, good morning. Tell us where you're tuning in from. Welcome to Market Wake Up. As I said before, my name's Jordan. This is John. I'm pointing the wrong way. This is John. And we are two macro traders, macro retail traders who are keyword traders. We don't just analyze the markets and tell you our opinion, but we actually try to make money off of our ideas. And we hope that our information can uplift a little bit about you. So let us know where you're tuning in from. Good morning, Malcolm. Good morning, Musclay. I'm waiting for Paul. I'm waiting for the others to come in. I'm waiting for the messages, guys. So make sure you get in chat and you say good day. John, how are you doing this morning?
Yeah, I'm doing really well, mate. I'm doing really, really well. I've got a big bite. It's going to be interesting today. Again, quite a thought-provoking one, right?
Yeah.
But it's definitely going to be an interesting one, I feel, because there's a good opportunity, I feel, coming on dollar CAD in particular. So I'm excited to sort of break that one down for us, and hopefully it's in a way that's easy to digest, and hopefully the crowd goes wild for it. So
I'm sure they will. But yeah, look, it's a good one to choose. Obviously, Bank of Canada interest rate coming up. So I think you've chosen to run one. In the Wild popped in, said, good morning to the macro boys. I like that. A bit of a hint looking across the TradeDelicious realm in the macro boys. Thanks in the Wild. And Malcolm's tuning in from Thailand. Good afternoon, actually. I think we're the same time zone, Malcolm. But let's talk about what happened overnight once again. Not too much to report. We are having a look. Obviously, Governor Bailey spoke yesterday. I don't think it actually gorged much of a reaction. We have seen a little bit. Oh, there he is. See, now Paul's in. Good morning, Paul. We have seen, obviously, a little bit of pound bullishness. I don't know what it is. I think our trade idea yesterday, I think we popped up the market, John. I think we did. I think everyone listened to the big bite analysis yesterday on going long Great British Pound, Japanese yen. Yeah. They read and they said, yes, Jordan, he wants to go long. We should also go long. And it popped up, trading into the 197s, pushing close to the 198 as we speak. So it'll be interesting to see if they can get any higher there.
Yeah. I mean, I haven't digested anything what happened with the Bank of England, because there was little reaction. So I didn't see really too much in the way of comments. There mustn't have been anything that was too shocking in the markets. Obviously, we talked about yesterday how the pound is kind of the best out of a bad bunch against the US dollar yesterday. It performed okay. Other markets didn't, like Euro, for instance, and whatnot. So, yeah, for me, pound is still an interesting market to have a little look at. I think we're seeing a very heavy pricing in of pound weakness in terms of a lot of chat across the board is that the UK are going to be the next to start going through this sort of aggressive rate cut cycle, and that we're going to see, a lot of pound weakness coming into the market. But I don't necessarily see that just yet. Inflation, yes, has come in towards targets and below targets, which is fantastic for the Bank of England. So they can say that's a pat on the back and a win for them. Retail sales were slightly up, though, and we know inflation data can be a little bit sort of behind, right? It's a lagging indicator, really. But, looking forward, the market, and if we think about sentiment and we think about what hedge funds are doing and things like that, they're not necessarily aggressively selling pound right now. So until that becomes an overcrowded market, I'm not particularly on the side of wanting to get rid of pounds. I've seen a lot of short in pound, but I can't see the value in that just yet.
I spoke openly about this yesterday. All market analysts are short pound. I'm giving them something you can't see off camera, and there's a reason you can't see it off camera, but I'm giving them two of them, and I'm saying, no, I'm going the opposite way. Yeah, like I still see strength in the pound near short term. Tip to be the aggressive ones to cut. I don't see it. I don't see it.
No.
I think, yeah, no. I don't think, but it depends on what obviously unfolds. We have the BRICS summit happening as we speak. We're in day 2 now, I do believe, which is hosted in the southwestern city of Kazan in Russia. President Putin has actually attended, and he is leading it with a lot of the BRICS summit. So it is really interesting. I always find these BRICS summits interesting because I want to know what's coming out of it. And it does kind of formulate this kind of against the European nations, against those Western nations, there's those two powerhouses kind of leaning into it. So keep your eye on your news as we see what kind of comes out of this, and if there's any more news and any more trading or any more deals, or even especially talking about oil. Other than Canada, everyone in those BRICS nations produce a lot of oil. If you want to go away from those BRICS nations when it comes to oil, your option is Canada. So it is an interesting one, which I may have just spoiled that I just realized I may have just spoiled the little poll we've got going in chat, but I hope not. I think it's a really, really interesting situation. Let's. What do you reckon? What do you reckon? We have a little gander into what's been happening with the VIX. You know what I'm going to ask you, John?
I know, and I feel like I should prepare myself all the time by actually taking a look at it in the mornings.
This is what, because that's cheating, John. We don't cheat. You're a trader. We've been trading around the VIX. I'll give you a clue. Yesterday, we're in and around, I think it was the 18.8, because you guessed 18.5 and we're at 18.8. Yeah. Give me a rundown. Where is the VIX priced in at 3:37 a.m. on the 23rd of October?
Okay. So how did assets perform yesterday? So I think assets actually had a decent day yesterday, maybe a bit of a 50-50 day. So I'm going to say that we are trading at 19.
19 he's gone with. He's wrong. It's 18.23. Yesterday was a down day on the VIX. Once again, we continue the down streak on the VIX. People are settling in to go to risk on assets. They think volatility is going to be dying. We are, 2 weeks out from an election that is a coin flip. We've got a few wars on. We've got trade tariffs coming through. We've got a bit going on, and yet the market still feels that volatility should be low. That is incredible to see. But there's the VIX, right? Let's run through where the assets are at to get everyone ready for their trading day today. So if there's anything you want to have a look at, guys, let us know in chat. Make sure you pop in the Wild Trades said. So you're telling me it's not maple syrup. I actually want to know the figures on how much maple syrup they actually produce in dollar value. How much money?
And we're gonna have to research
make Canada. How much money does maple syrup make Canada? I'm actually curious. Have a look at that, John, while I search through this. All right, so we're going to start with the Aussie dollar. We're down 0.25% today. Then we're going to have a look over at the euro, which is down 0.5. Then we've got the pound, which is down 0.1. US dollar CAD's relatively unchanged. US dollar Japanese yen up almost 1%. This is the big mover yesterday, the Japanese yen, and even this morning, the Japanese yen weakness. This was the play. This was the play from yesterday. I openly discussed. You can see the tabs up here. I've still got them open, looking at these Japanese bonds, looking at the difference between the Nikkei and the Japanese yen index. The play is Japanese yen weakness in my books. It does look like that. So far today is playing out quite nicely. The XJO is down 0.1%. The DAX is down 0.17. The Nikkei is down 0.5%. There's the weakness in the Japanese industry. The FTSE is down 0.06, and the S&P 500 is up 0.05% early this morning in pre-market. Coffee's down 1.2, gold's up 0.2, nat gas down 0.13, silver down 0.4, sugar up 0.7, and oil unchanged, which is interesting with the BRICS summit happening at the moment. Bitcoin down 0.8 and Ethereum down 0.6. Bonds relatively unchanged. Nothing really to read into on the bond market. What do you got for us, John? How much money does maple syrup produce?
Do you want to guess first, or do you want to?
Okay, I'll guess. Are we talking millions or billions?
Well, I can only really see the 2022 figures, so I'm talking millions.
Okay, we're talking
From a quick
millions.
Google search.
Canadian dollars?
Yes.
You're not sure.
No, it's US
I'm
dollars.
gonna go. It's got to be in the hundreds of millions.
Yeah. Yeah, it's definitely the hundreds of millions. I'll give you that.
486 million.
No. $616 million. That's in 2022, though. That was in 2022. I did have a little look at how much Canada's economy is maple syrup, and Quebec's maple industry contributes to 1.1 billion to Canada's gross GDP.
Wow. There you go. That's not bad at all. That's not bad.
Is maple syrup popular in Australia? Because I don't feel like maple syrup is popular over in England.
Like if I'm having pancake, it's my go-to. But like it's not something I hunt for. No, maple syrup is here. You can access it, but it's not something that I'd say everyone is hunting for.
That's fair. I'd say the same here in England, to be honest. I wouldn't say there's maple syrup everywhere.
Yeah, well, 1.1 billion for the GDP. I mean, that's pretty high. What do we have coming up today? We know we've got the Bank of Canada interest rates monetary. Well, I'm assuming we're going to touch on that in your big bite.
Yes, yeah. We've got Bank of Canada coming up. We've got the press conference, obviously, that follows. We've got another speech by Governor Bailey as well. So
did you see Lagarde's going to have a speech? And if you didn't see in her last speech, she personally invited Donald Trump to go into the ECB headquarters to show him how many people are working around the clock, because Donald Trump's come out and said they only work 3 months a year. It's a waste of money. So, Lagarde, if you don't know, Lagarde is the head of the ECB, which is the European Central Bank, which is the bank that controls the monetary policy, the interest rate all over Europe. Donald Trump's attacked the ECB. She's come out and personally invited Mr. Trump to come in and see all of the hard work that everyone does at ECB headquarters.
I mean, it's going to be interesting if he gets into power, isn't it? And how.
I mean, there's a few things we can guarantee.
Yeah.
Jerome Powell's being sacked.
Yeah.
Right. Who's the head of the Fed, which is the American central bank. Okay.
Yeah.
Jerome Powell's losing his job, and there's going to be tariffs. I think they're the two things we can guarantee.
Yeah. That guaranteed tariffs and everything. I'm pretty sure he was on about a 60% tariff on China. And then he was talking about obviously pretty much trying to destroy the Mexican relationship that they have in terms of automobiles. So yeah, guaranteed tariffs if Trump comes in. And at the moment polling suggesting that Trump is in the lead, and that's the scary thing. So why the VIX is as low as it is, I have no idea. I feel like again the market is just, it's almost just like putting the blinders on and just being like, all this stuff's going on around us, but we don't really care. And you're like, okay.
Yeah, I've got. I don't have an answer for you. I'm afraid. Sorry.
Maybe someone in the chat will.
Yeah. It is an interesting one. The only reason I can assume the VIX is falling is the lack of interest, and the volatility index is going down because volume is dropping because people don't want to trade ahead of the election. But that also means there's more risk. Because if volume drops, which actually, let me have a look to see if volume is dropping. So give me a quick second. Because if volume does drop, it means it's just going to take one person with a large bank account to go, hey, I've got an idea. Let's move the whole market for fun. And this VIX goes through the roof, and then we see a carry trade unravel like we've never seen before. So volume is falling. Volume is falling in the S&P 500. So there you go. It's making a little bit more sense, but it does make it a little bit more risky.
Yeah, absolutely. But let's get into the big bite then, George.
Ooh, okay.
Let's answer our great poll of today.
Yeah. For anyone who's new, what's the big bite?
The big bite. We're going to be talking about the Canadian dollar crisis. Essentially, we're going to be talking about the weakness that we've been seeing in the Canadian dollar, and if it will be sustained. Because I've got a bit of a controversial trade, I feel, for today. I feel like it's a very controversial trade because I'm going to be talking about a seasonal play. I'm going to be talking about a sentiment on the retail side of things and how retail are positioned at the moment. But we're also going to talk about the situation in Canada and what's really been sort of helping this weakness at the moment. Now, a lot of it is obviously to do with some downside coming from inflation, right?
Yep.
Now, if we bring on my screen.
Yeah. Is you okay?
There we go. Yeah, thank you. For some reason, I couldn't see the button. So, yeah, the top Canada exports is obviously oil, right? And different types of minerals. So if you got that right in the chat, applause to you, pat on the back. It wasn't maple syrup, unfortunately. I know most of us would like it to be that because that would just be hilarious. But yeah,
you'll be happy to know I've actually got the votes, the percentages.
Oh, okay, right? Yeah.
58% of people said crude oil.
Nice.
They were happy with crude oil. 0% said cars, which might I add is their second biggest export you're seeing here. Yeah. So that might surprise people. I expected more people to say cars. 0% said cars. 0 people said gold, right? Which is very, very interesting. 42% of people said maple syrup.
I'm hoping people in the chat are just doing it for the laugh, to be fair, not necessarily right. But yeah, you're right actually. So it actually goes sort of oil, vehicles, gold, essentially, which is quite surprising really. But they do a lot of gold mining and whatnot, and exporting gold. So that's quite interesting to see. Probably exporting it over to the US of A. Because that's their biggest trading partner, right? So Canada really does get it's very similar to the relationship between China and Australia, right? Australia's biggest trading partner is China. If China's doing a bit poorly, it can have a little bit of a knock-on effect. In Canada, their biggest trading partner is the US of A because they are connected, right? So it's very simple to do. To trade between each other.
I'm sorry for ruining your train of thought here, but this has shocked me. Andreas has just popped in and said, I don't even know what maple syrup is. And at this point, I'm too afraid to ask. That's his subtle way of asking. It's the subtlest way of asking. I don't even know how to explain what maple syrup is. How do you?
No, I don't actually.
It's a syrup made from maple.
Made from maple, yeah, maple.
How do you explain what maple syrup? You can Google it, Andreas. It is like it's something you put on pancakes or bacon or desserts. It's a syrup. Yeah. I was looking for the option to vote Canada geese. Interesting. Sorry to ruin your train of thought. So US Canada massive trade partners that do a lot of between each other.
Yeah. So obviously there's a lot of connection there with the US, but the situation between the US and Canada is very, very different in terms of what's going on globally right now. Let's just touch upon interest rates. We have an interest rate decision coming up today. They are expected to cut by 50 basis points. So currently we're at 4.25%. They're expected to bring that down to 3.75%. And a big reason of why they are kind of slashing those interest rates and cutting those interest rates so aggressively is because they are worried about one thing, and that one thing is inflation. So Canada's inflation has actually been fairly settled if you look over a sort of a year period, it has been fairly settled until the last 3 months. In the last 3 months, it's really started to accelerate to the downside. You can see by the curve of what's happened here. We're at 2.9% in May. We're at 3.4% in December. But over the past couple of months, we've started to really, drop into what is known as the target range. So the target range for any central bank with inflation is usually that 2% target. And we've seen a move below that now, which arguably is okay, right? That's fine. But what a central bank doesn't want to see is deflation. So that's when it starts to go into the minuses, right? And that means costs, well, basically the cost of goods and services starting to decrease, right? They don't necessarily want to see that, okay? Now, the other thing with that as well is their employment rate, okay? Their employment rate has been very high, okay? It's the unemployment rate is basically telling us how many people are unemployed within the economy but are looking for work, right?
It's big.
Say again.
6.6. It's big.
It's big. It is big. It was big. And it has come down, but only by 0.1% to 6.5%. So what they're trying to do is boost the economy, right? They are trying to add stimulus into the economy. That's what cutting rates does. It adds stimulus into the economy. It wants businesses to borrow more, essentially. It wants economic growth. It wants to reduce this unemployment rate. So it wants more people working. It wants more money flowing within the economy, basically. Now, with that, there can come a stage where, as central banks cut, they're trying to influence growth, and there'll be like this bottom in the curve, right? There'll be a bottoming out. There'll be a slowdown in sort of how the inflation decreases, and then we'll start to see it, uptick. I'm doing this little thing here with my hand, but I don't know if people can actually see that. So for me, there's a really interesting dynamic going on here at the moment in Canada, where they're cutting aggressively. They're trying to stimulate growth. We've seen their biggest, exporting commodity, oil, going through the floor, right? So that's going to have a big impact on their inflation, because oil prices directly impact inflation, because oil is what makes the world go round, right? So if we do start to see this huge sell-off in oil, then it's going to really impact the weakness in the Canadian dollar market. Now, actually, hedge funds are buying oil, and they're buying it fairly aggressively. There's actually quite a significant long signal on oil at the moment, which I find fascinating, because that leans into how I'm thinking about the dollar CAD play at the moment. So let's just go check out dollar CAD at the moment. Let's have a little brief overview of what's going on in the charts. So the last time we kind of really went in depth on dollar CAD was up towards this 139 area, right? This was where we had that COT signal short, and we saw this impressive turnaround in prices, right? We're up at these 139s, which was the highs of the weekly trading range. And I mean, if we just go scope the weekly chart and just zoom out a little bit, we have been in this long-term range since 2022, right? The market has been sitting within this range. And again, reason being is because they're closely correlated, the US and Canada. So we usually see this type of moves. There's, very rare occasions where we get big periods of trend. I mean, look, if we go to the wider scope, there is a massive trading range, right?
Yeah.
It's been since 2015. But this tighter range that we're in right now is an interesting one. Obviously, we saw the COT signal come in. We saw a lot of selling pressure coming in. And now we're approaching an area again where sellers were very, very active within the market. Now, I'm very interested to see if we actually start to see a reversal coming up here for dollar CAD prices. Now, a lot of traders may look at this and go, why the hell would I want to short this, right? Because the market is on a tear to the upside, right? And you're looking at the US economy at the moment. The US is growing, X, Y, and Z. Their policies are not necessarily indicative of weakness for the US dollar. So why would you want to sell this? Now, one big reason I want to get involved with potential moves for dollar CAD is the way retail are positioning themselves right now. And then the second one I'm going to go in is a seasonal play. Okay. So the first one with retail positioning, if we just take a look, and this is just basically showing us the positions of retail traders. Okay. Now, take it with a little bit of a pinch of salt because it's only sponsored by one particular source. Okay, this isn't the commitment of traders non-reportables. This is just how retail are positioning themselves. But what's interesting about this chart is we've been at similar levels before, and where were we at those similar levels of shorting was where that cut signal was at that 139, right? Now, what tends to happen is retail will go against the trend. Okay, they are expecting a turnaround there. By nature, they are not trend followers. Okay,
yeah.
So we can see that they increased their short positions towards a market top. The market fell. They were heavily long dollar CAD throughout this downward move. They started to decrease those positions. What happened to dollar CAD price? It went higher. So we're in a very similar position where we are with that previous turn. So that alerts me. That alerts me to think, well, if you're, let's put it this way, if you're a retail trader and you're long dollar CAD, and then you saw this information, would you still want to be long dollar CAD? In my opinion, no. Yeah, okay. Rolling along so far. Yeah.
So
let's get to the seasonal play. Let's get to the seasonal play, right? Because I think this is actually really interesting now. Now, seasonally, if we just look at a 10-year period through October till sort of mid-December, the market can be bullish, right? But the key thing is here, we're in an election year, right? So if I just click onto the elections, it changes. And what I find interesting is actually through November till the middle of December in an election year, typically we can see some downside, right? I find that fascinating because although we've not necessarily seen price correlate this year with the election year seasonal, we can't ignore the fact that we're coming up into an election, right? We can't ignore the fact that that's coming up. And I think there's going to be a very interesting dynamic where we could see a little bit of a shift right now. This is obviously over a very small period of time, right? It's only taking 3 events into occasion here, right? So we'll have to expand it out to have a little look at, you know, over 15 years or whatever, where we do get a little bit of a big move.
Well, I did that as you were talking. So switch it to 21 years.
Let's go to 21 years.
And then click elections. From the top into December on the same dates, you're looking at a 80% decline.
Yeah. So again, I find that really fascinating that you've got a combination of, so central banks cutting, that is inherently can be quite negative for a currency, right? Because people are anticipating that to happen. But is that being priced in? Has that been priced in now? That's the concern that I've got. The second concern is retail are heavily short, which obviously I say you want to do the opposite, but the problem is they then get out of those shorts at the top, right, where they should be short. And then we've got this seasonal play. So I think as a three combo move here, I quite like the idea that we should be looking at a dollar CAD short towards these highs.
Sorry, like you're short from the highs.
Well, I would be looking for price to come into the resistance level, and then I'll be looking for a reversal in around this area. But essentially, I wouldn't want to be long into that point now. And that's where I think a lot of retail traders will go wrong, because they would be thinking that this is just going to continue to push to the upside because there's a trend here. And this is where I think that macro has a little bit more of an influence, because I use it in a way of confirming or adding a little bit more bias, adding a little bit more efficiency to what I do. So I would use macro in a sense of, okay, well, do I want to be long right at this position right now, knowing what's going on across the board? I don't think that's a good idea to start being long here, you know, and a lot of people will be thinking the market's bullish. We've got this kind of bullish trend. You know, a lot of traders don't even focus on bigger time frames. So they'll be looking at sort of your hourly chart and they'll be seeing this strong bullish upward trend, right? But they're not going to be focusing on where everything else is positioned. So you might think it's a good idea to get long here, but price might hit the high there and just tank, right? Because of the way the market is sort of setting up, essentially. So for me, even if we go just take, sorry, I know we're coming out of time, but if we just go take a look at the US dollar, you know, look how this run has happened. This was a commitment to trade, a long signal down here. Market has rallied up, but we're approaching levels of resistance now. You know, look at this sort of area here where we had that big sell-off. We're approaching those kind of 104s and whatnot. And I just think that at some point there will be a shift. And I feel that that dollar CAD being at this resistance would be a good area for that to happen.
I like it. I like it. That's a good, guys. What do you reckon? What do you reckon for the take it to go today? Take it to go. What do you reckon for the big bite today? I respect it. I'm actually going to throw in a take it to go because I found this one interesting. One thing I've loved about trading equities so far this year, and I am transitioning to look at equities here a little bit, are the seasonal plays, and in particular, the seasonal plays, which I like to call earnings run up. The run up to the earnings. Time and time again, they're beautiful. So I'm going to leave you guys one. It's called the Take It to Go because it's a thinker that you can take away and have a think about. Microsoft, arguably one of the biggest companies in the world right now. You can see from today's day all the way into the 8th of November, the pre-earnings run-up, 80% win rate with an average return of 4.2%. That's over 15 years of data there, which is fantastic. Earnings for Microsoft are on the 30th of October. That gives you 7 days ahead of earnings for Microsoft. So there you go. There's your Take It to Go, guys. Have a fantastic day. We're going to be back tomorrow at the same time to do it all again. Enjoy your day. John, thank you so much for the big bite today. And everyone else, take care. Trade safe. We'll see you tomorrow.